Hi, I'm Kraig Ward, founder and managing director of Bearhug Recruiting. It's September 15th, 2025. The market hasn't cooled, but it is shifting gears. AI is still pulling in capital at record levels, but investors are tightening the funnel. Startups are being held to tougher standards, and leadership teams are expected to deliver more with less. That's why each month I step back with my team to map out the real signal beneath the noise. We track what's accelerating, what's slowing, and what that means for executive hiring, giving you a faster read on the market and a playbook to stay ahead of the next turn. Let's start with the foundation, which is company creation itself. Business formation peaked in late 2021 when nearly 376,000 new establishments were created in a single quarter, the highest on record. Since then, the pace has cooled. By the end of 2024, new business births had leveled off at around 320,000 per quarter. On the flip side, closures spiked through 2022 and 2023. A big part of that was the delayed fallout from the pandemic. Businesses that had been kept afloat by stimulus and cheap capital finally ran out of runway once government aid expired, interest rates rose, and costs surged. Add in a wave of overformation in 2020 and 2021 when thousands of new ventures launched on shaky foundations, and it's no surprise that many didn't make it. But here's the encouraging part. The most recent data through the first quarter of 2024 shows that business deaths have started to moderate. The weakest players have shaken out, leaving behind teams that are leaner and more resilient. The Bureau of Labor Statistics only updates this data quarterly, so what you're seeing won't change month to month, but it does give us a clear sense of the bigger cycle that we're in. And here's why it matters. Net business creation is still positive, but the days of hypergrowth formation are behind us. This cycle is more selective. The companies being created today are disciplined by design, built to withstand higher rates, tighter capital, and tougher standards. For executive hiring, that translates to fewer overall roles, but a much higher bar for impact. Leaders who can do more with less, who are fluent in AI and capital efficiency, and who can scale lean teams, those are the ones that are going to get the calls. Now let's look at unemployment claims to get a better sense of how the labor market is actually behaving beneath the headlines. Initial jobless claims ticked higher in early September, coming in at about 263,000, which is the highest weekly reading we've seen in months. The 4-week moving average also rose, now sitting just over 240,000. That's a notable jump from the summer lows, but it's nowhere near the levels that we would associate with a systemic breakdown. What we're seeing is steady friction, not collapse. And here's why that matters. For founders and investors, the environment remains high friction. Hiring timelines may stretch, and candidates are asking for more certainty before making moves. But this isn't a panic scenario. At the executive level, demand remains strong. Top leaders are still scarce, and they continue to hold the leverage. The bottom line is, the window to land transformative executives is open, but it's still a seller's market at the top of the talent ladder. Now let's zoom out to the broader jobs report, and here the slowdown is much clearer. In August, the U.S. economy added just 22,000 jobs, well below the 75,000 forecasted. July was also revised up slightly to 79,000, but June was revised all the way down to a net loss of 13,000 jobs. The unemployment rate ticked up to 4.3%, which is the highest since late 2021, and a broader measure of underemployment, which includes discouraged workers and those stuck in part-time jobs, climbed to 8.1%. Healthcare and social assistance continues to add jobs, but we saw losses in manufacturing, wholesale trade, and the federal government. Wages rose 0.3% month over month and 3.7% year over year. Still positive, but a step down from earlier momentum. And here's why that matters. The labor market is clearly slowing. Hiring timelines are lengthening, and candidates are becoming more selective. But this isn't creating a glut of available executive talent. Demand at the top of the ladder remains strong even as cracks show lower down. And with the Federal Reserve widely expected to cut rates later this month, founders should prepare for more volatility, but also recognize that the current environment still offers a real window to land transformative leaders. Now let's zoom in on tech specifically, where layoffs remain a defining signal. So far in 2025, nearly 95,000 tech layoffs have been reported. That's on top of more than 150,000 in 2024 and over 260,000 in 2023. In August alone, about 6,000 roles were cut, up from just 1,600 in June, but down from more than 16,000 in July. These layoffs continue to reshape the market, surfacing executives who rarely come onto the job market. But here's the reality. The very best leaders were never laid off, and the handful who were are almost gone immediately. That's why superior talent is the moat. Founders and investors who move fast can secure the rare leaders who actually know how to scale. This isn't about mass hiring, it's a sprint to land the few who can drive the next wave of growth. We've talked about how layoffs are reshaping the talent pool, but the other half of the story is capital, and here the shift is even more dramatic. In the first half of 2025, AI startups captured 64% of all US venture dollars. Globally, AI grabbed more than half of all VC funding. But it's not just volume, it's concentration. Carta's analysis of 3,000 primary rounds shows the top 1% of AI startups are now valued at 3 to 10 times higher multiples than non-AI peers. At the seed stage, the 99th percentile valuations are hitting $161 million, more than double the next tier down. At Series A, the 99th percentile is $716 million, nearly 200% above the 95th percentile. And by Series B, we're looking at $2 billion plus valuations, levels that used to take years to reach. This is the math of winner-takes-all economics. In AI, the gap between number 1 and number 3 in a category isn't incremental, it's existential. So what does this mean? Well, for founders, being AI adjacent isn't enough. You either build something that couldn't exist without AI at its core, or you'll be competing for scraps. For executives, the bar's moved. Companies raising at these valuations can afford to pay top-of-market comp, and they're looking for leaders who bring defensibility, velocity, and AI fluency from day one. The bottom line, venture hasn't just tilted toward AI, it's split into two. There's AI venture capital, and then there's everything else. So we just looked at how capital is concentrating in AI. Now let's turn to executive hiring because demand for top leadership hasn't slowed down. In August, open search volume came in at 482, almost identical to June and July. That's up 31% year over year, and the 3-month rolling average is running 14% higher than the prior period. The key point is, executive hiring remains elevated, even as the broader labor market shows signs of cooling, but the competition for transformative leaders is still super intense. For founders and investors, that means the window to hire is open, but the race to secure top talent is very much on. Next, I'd like to share the 3 biggest hiring challenges most startup CEOs are facing. The first is attracting top executive talent without overpaying. Startups can't match Meta, OpenAI, or other companies in big tech on cash, so they must win on mission, equity, and product conviction, and overcome doubts about startup risk and exit potential. The second challenge is finding the right stage fit leader. Not every seasoned executive can operate in an early stage company with chaos and ambiguity. CEOs need someone who's scaled from 5 million to 50 million, not 500 million, and who won't over-engineer things or require Google-level team resources to get anything done. The third challenge is running a high-stakes hiring process while running the business. Executive search requires precision. It requires scorecards, strategic sourcing, which is one of the hardest parts, and creative and aggressive outreach, and story weaving, extremely tight interview coordination, and, most importantly, investor alignment. All of this while CEOs are already stretched way too thin, and so are their teams. A mishire at this stage, it's not just a delay, it's a major setback. So having the right partner is essential to avoid balls being dropped. And lastly, I'd like to share the 3 most common critical talent gaps that are blocking early and growth stage startups from unlocking 100 million in revenue scale. The first major talent gap is attracting go-to-market leaders who can balance both strategy and execution, acting as both a coach and player. Too many teams lack leaders who can build repeatable sales motions, navigate complex B2B buying cycles, and align sales, product, and customer success around a unified go-to-market plan. The second major talent gap is prioritizing and successfully hiring strategic finance leaders. It's surprisingly common to meet CEOs who wait too long to bring in a strong finance leader, someone who can build smart compensation and forecasting models, integrate systems, and bring discipline to financial planning. Without this leadership, CEOs often struggle to model growth, manage burn, and make confident data-backed capital decisions, which becomes a critical issue during fundraising. That's often when investors will bring us in to help. The third major talent gap is hiring a cross-functional product leader. Vision, engineering chops, or fundraising skills alone aren't enough. Many startups need a product leader who's fluent in agentic AI, can prioritize across diverse customer types, drive delivery, and scale the team without creating chaos. These roles, go-to-market, finance, and product, are the hardest to get right and the most essential for startups looking to unlock $100 million in revenue scale. Speaking of which, if you or anyone in your network needs help hiring, it's important to know that most executive search firms are still operating in the past. They're slow, expensive, and they're built for the enterprise, not for fast-moving, resource-constrained startups. At Bearhug, we've re-engineered executive search from the ground up. We've integrated modern tooling, smart automation, and a fresh approach to deal structure, all designed to match the speed, budget, and the realities of early and growth stage teams who are looking to unlock $100 million in revenue scale. We call our approach the easy button. This model is guaranteed to deliver you with 2 or more executive level candidates chosen off our slate within 30 days who'll be advanced to at least the 3rd stage of your interview loop, or you won't pay us a penny. And keep in mind, these aren't active job seekers. They're the top 10% executives vetted against your exact requirements, scored, and fully written up. They'll show up to the first interview pre-qualified, pre-educated, and pitching you on why they're the right person to hire, even though just days earlier, these people had zero intentions of leaving their current role or entertaining something new. We enable you and your team to stay focused on unlocking that $100 million in revenue scale, while we handle 90% of the heavy lifting and only have you engage in the critical 10% of the search process that matters most. This way, you and your team can stay focused on accelerating product market fit, creating a fantastic customer experience, and accelerating your business growth. Based on our historical averages, you should only need to interview 3 to 4 people off our candidate slate to make a placement. And while we've finished executive searches in as little as 9 days, it's safe to plan on it taking roughly 45 days from kickoff to getting a signed offer letter, which is still 2.7 times faster than the industry average for executive level search. Lastly, you can plan on advancing at least 80% of the candidates that you choose off of our slate to the 2nd round of your interview loop, which demonstrates just how well our candidates will match what you're looking for. One thing that often surprises both clients and their investors, and that we believe will surprise you, is the level of transparency that we provide. From day one, we deliver a metrics-driven summary of every key action, updated weekly, along with real-time visibility into how the talent pipeline is progressing. This allows us to iterate quickly if needed and bring each key stakeholder into the process at exactly the right moment to help get the ball across the goal line. And the best part, we know trust has to be earned. And to prove our model works, for select new clients, we're willing to front load the work on their first search that we work on together and defer our engagement fee until interviews begin with top picks from our initial candidate slate. Plus, every invoice that we send is always tied to pre-agreed upon performance milestones. For the record, engaging with Bearhug won't feel like a high-pressure sales pitch. Our focus is on leading meaningful, strategy-driven conversations with founders and their investment teams who understand that great leadership isn't just important, it's the moat. The best outcomes come when the right executives row in the same direction, and that kind of alignment doesn't happen by accident. You and your backers are already thinking about replacing or adding key executives to your team, and working with Bearhug will just make that process easier. If you're a hands-on investor looking to de-risk your portfolio, or a founder ready to unlock $100 million in revenue scale, let's talk. To kick things off, we can swap notes on what we're both seeing in the market. Then I'll walk you through exactly how the Easy Button MSA works in practice and share our frameworks, tools, and referral systems, all useful whether we end up collaborating or not. Go ahead and use the link provided to book a call, shoot us an email, or pick up the phone, and let's explore what's possible. I'm looking forward to the conversation.